All right, creators, let's talk about some taxes, but in a way that applies to your business. There's a new bill making the rounds nicknamed the Big Beautiful Bill, and it's got some real changes coming for anyone running a business, but there are some specifics that we can call out for the creator business that you have as well. So if you've got gear expenses, brand deals, an LLC, or maybe you're thinking about hiring your first editor, this stuff matters. So stick around. We're breaking it down in plain English, and I'll show you what to look out for so you can keep more of your income, spend smarter, and stop leaving money on the table.
All right, let's get into it. So as we tee up here at Royal Portrush, let's talk about one of the first things within this new bill. First up are the tax rates. The bill makes the current individual tax brackets permanent. So that means there won't be any sudden rate hikes after 2025. If you're having a good year, say a brand deal pops off or YouTube short goes viral and drives ad revenue to some of your other videos and those go viral, there won't be any higher taxes just because the current rates expired. So yeah, that's a great win for planning ahead. The next thing is something called the QBI deduction. Now stay with me here. This means the qualified business income deduction. So if you're an LLC or an S Corp, the bill keeps that 20% deduction around for good. There are some, limits, but for the most part, it's a straight 20% off your net income, off the taxable base of the income. So like say you were at 100K, that brings the taxable base down 20,000, so you're at 80K that is then taxed just for being self-employed. If you're not currently set up as an S Corp yet or not sure what qualifies, this might be the nudge you need to explore that. So yeah, even small creators will get something there, provided you've got the entity structure set up there properly. Next thing is the bill boosts something called Section 179 limits and extends the bonus depreciation through 2030. Now I know that's a lot of tax jargon there, but basically this is something that allows you to write off the full cost of equipment, lights, microphone, PCs, even studio renovations, depending on how your living arrangements are set up in the year that you buy them. So in the past, you used to have to take some of these costs over the course of a number of years, but now, depending on the equipment and kind of the class that they fall under in terms of the equipment, that's something a tax pro can help you figure out. But basically all those things that help you to basically do your job as a content creator can be written off in the year you buy them and not have to worry about taking that cost over a number of years. So if you're thinking of upgrading your gear or maybe converting a bedroom into a stream setup, that can be something that happens almost immediately for that tax year versus like over 5, 7, 10, 15 years or whatever. So yeah, that's a pretty strong tool there. This is one that might not apply to a ton of folks, but any sort of R&D, research and development stuff is now expanded during this bill. So if you paid someone to build like a custom plugin, or maybe you're writing your own editing macros or AI tools, this can count as research and development under the new bill, meaning it's something that you can expense right away. So if you don't necessarily need to be a software company. If you're investing in how your business runs, this could be something that applies. Charitable donations also just got easier. So in the past, you used to have to do what is called itemizing your deductions. Basically, you had to split them out between home interest, state taxes, charitable giving were kind of the big three. now, but on the offset, sorry, back up a sec. So you could do something called the standard deduction, where if you didn't have itemized deductions that equaled up to the standard deduction, you could just take the standard deduction so that you still got a pretty solid benefit from that. But what's changed in this bill is that you can now deduct up to $2,000 in charitable donations, even if you take the standard deduction. So even if you take that in this year, you don't have enough to itemize, you can still get an additional $2,000 if you donated the $2,000 to charitable purposes. You can take that on top of the standard deduction if you don't itemize. We find that there's a good mix of folks that we work with that itemize or don't, so this could definitely be something to keep in mind throughout the year. So if you're giving back through like charity streams or giveaways, or you're donating a portion of your merch sales to a charity or whatever, you can get a tax benefit on that without necessarily needing to itemize on your tax return. There's also been a change with the 1099 threshold. So what that means is if you get a 1099 from, say from YouTube or from, a company you did a brand deal with, if you made less than $2,000 under the new, back up a second again, sorry. So if you made $600 or more, these companies had to give you a 1099. Now, under this new bill, they aren't required unless they've paid $2,000 or more. So that goes both ways too, right? So like if a company paid you less than that, they don't necessarily have to send you the 1099. They still can if they want to, but they're not required by the IRS. But then also, if you work with some like part-time editors, or you hire like a friend to do a quick edit job or something like that, and they're under that $2,000 threshold for the whole year, then you don't have to worry about providing them 1099s because the threshold has bumped up under this new law. And for those folks that are in kind of music or sound production, there is kind of a special call out here where if you're producing like a podcast, releasing music, or even doing like heavy audio work on a YouTube video, this part's kind of for you here. You can now write off up to $150,000 per sound recording project up front, versus having to kind of like almost like the studio stuff, write it off over time for these bigger projects, which is fantastic. So this, production, studio time, even mixing, like all that sort of work is now up to $150,000 per project, which is, it's not even per year, but it's per sound recording project. So that could open up a lot of opportunity for people to get into something in that space if they've been wanting to kind of venture off into something else. A lot of opportunity for deductions kind of on the sound and music production side there. There's also some new stuff around paid leave and childcare credits. So if you've got a team or you're thinking of hiring, the bill offers new tax credits for things like paid family leave and even childcare assistance. So not every creator's there yet, but if you're scaling or looking to grow or add employees, this could be something worth planning for. It's a little complex, but we know it's something we can get into if you wanted to kind of dive into that realm a little bit more. So what now? As we kind of look towards wrapping this up, if you're an LLC or an S corp, double check your setup and kind of the eligibility for your business income, making sure everything's flowing through properly and you're recording all of your inflows and outgoings. Plan gear upgrades or studio builds kind of with the bonus depreciation in mind. Make sure you kind of work with a tax pro on that. I guess I'll probably sum that up here in a minute, but just make sure you're kind of on the same page with somebody who understands kind of the rules behind all that. But otherwise, that's something you can kind of keep in mind in these next few years. Keep track of the donations and anything sort of R&D related with the new benefits within the bill. That's something that could be quite powerful. And start thinking long term. This bill gives us a rare bit of kind of tax stability, provided it kind of continues as it is. So something to kind of dive into and kind of work with a tax pro on planning your tax situation with your business in this kind of unique space that we're all in. So yeah, if you found this helpful, please like the video, drop a comment. If you got any tax questions, please let me know. Also subscribe for some more creator tax tips and all that. But yeah, I appreciate everybody who's taken the time to come out and watch this video. And if there's something in here that just kind of resonated with you, I'll drop a meeting link in the description below. Please feel free to click on that and set up a time with me. I'd love to chat through and see how we could help. But otherwise, take care. I'll see you soon. Peace.